All right, everybody, welcome to another episode of the Business Blueprints. This is episode 15. This week, we're going to talk about some lending, and I have Kevin O'Loughlin of the man who brought Movement Mortgage to Pittsburgh.
That's right, man.
All right. Thanks for coming, man.
Thanks for having me.
Awesome. So let's just dive in a little bit. We've talked a lot over the years, but not really like in depth on like how'd you get started in lending? Like, how did this even all come about? Like, how did you get Movement Mortgage to come to Pittsburgh?
Yeah, man. So I grew up in upstate New York, so about an hour south of Buffalo, and my dad had a car dealership. So I initially always kind of worked in like the wash bay and worked in and out of the dealership and stuff. And I went to college in this small town called Olean, New York. Went to St. Bonaventure, and coming out of college, I needed an internship. And my dad was linked up with this guy at the bank that he would send his auto loans through for when people need financing on cars. So
your dad owned the car dealership.
Correct. Gotcha. Yeah, he owned a GM dealership, and I didn't want to go into the car business. I was like, my dad and brother are doing that. I'm trying to do my own thing, whatever. So kind of went left, they went right, and he got me an internship at this bank. So coming out of college, I started, looking at credit reports and doing debt to incomes and LTVs on auto financing. So I did that for about 3 or 4 years, and eventually, and I was a loan officer doing that. So dealers would submit their applications, and then I would approve them. Very easy to get an auto loan compared to a mortgage same day.
Oh my God. I don't think, note to anyone out there, if you get denied for an auto loan, you're going to get denied for every loan.
Yes. I always tell people, get your mortgage first, get your auto after, because it's just ridiculously easy. They don't even, we would have applications come in, and we wouldn't even ask for pay stubs on anything. There's no verification.
I've never been asked for a pay stub in my entire life. So I bought an $85,000 truck when I was making $22.50 an hour. Not asked for one pay stub.
No. There's no income verification at all on autos, which is kind of wild. I think that's the next bubble that's happening in our country, and the delinquencies on auto loans keep rising and rising. I call my brother up. I'm like, the bubble's coming. Yeah.
As the prices of the actual inventory rises, crazy. Insane.
It's crazy. We see people making 40, 50K a year, with a $1,200 auto payment, and it's like they're doomed.
You're absolutely doomed.
Yeah. So, but that's where I got my taste into lending. And, after doing that for 3 years, the bank had an opportunity in Pittsburgh, Pennsylvania. And I was still working in the small town of Olean, New York. And the population was very small. That's where I grew up. So it was I'm ready to get out now. And so I took that bank down to Pittsburgh and just started going to car dealerships all around Pittsburgh, knocking on doors, trying to get them to send loans through our bank. So I was still a loan officer, but I was a business development representative at the same time. So I did that, and that got old after a year, and I just started to apply for jobs in warm states. So literally, I was Buffalo's cold, Pittsburgh's cold. I'm take me to Cali, Florida, Carolinas, whatever. And long story short, took a job out in Houston, Texas. That's
very hot.
Very hot.
Very hot.
Very hot. Packed up, moved out there for a year, and that's where I got into loans, and that's where I learned mortgages. I was in a call center, smiling and dialing for 12 hours a day, and learned mortgages very quick. The company was terrible. The leadership was terrible. And then I eventually started looking at other mortgage shops that I could go to, and that's when I stumbled across Movement. And funny enough, I was Houston is still too hot. This is too hot. I went too cold, too hot. I'm Pittsburgh wasn't that bad. Maybe I'll go back there. So as I'm moving back to Pittsburgh, I just started hitting up mortgage companies, Movement being the main one I was attracted to, and just blew up the CEO on LinkedIn until he would take my call, and that's how Movement in Pittsburgh started. So
yeah, it's wild because I always hear about it is, people making business things on LinkedIn, and I'm not heavy on it. I'm not, I never really have been, but yeah, I mean, that's probably one of the first stories I've heard of. Actually, it's the second story I've heard of people blowing up the CEO on LinkedIn until they had an opportunity to sit down with, the other guy was, He's a like Whitetail Outfitters or one of those other land brokerages. He blew up that dude from Florida over and over and over until he met the guys and then brought them to Pittsburgh. So it seems kind of similar thing.
I don't know why, but like you just can't get a CEO's phone number, and I had some sort of call reluctance. I don't know if I would have probably called him even if I had his number. Right. I was so used to calling people all day, but LinkedIn just makes it easy. And I can remember like I would have a terrible day due to stuff that shouldn't be happening, like an underwriter messes up your file. You just don't have the operational support. And I remember just messaging him, and then he like got right back to me, but then 3 to 6 months went by, nothing happened. So I had another bad day. Then I hit him again. I was like ex-girlfriend stalker level. So that's how.
Can't take the shit in my life, man. Throw me a lifeline.
Yeah. Yep, exactly. So that's how it started, man. And that was October of 2016 when we officially started movement in Pittsburgh, and fast forward to today, we're actually the #1 residential lender in Allegheny County. So it's come a long way.
Oh yeah.
There's a lot more than just me at Movement. We probably have 10 to 12 loan officers, boots on the ground daily. So we have a lot of good people, and it's growing pretty quick.
Yeah, no, it's an amazing thing, man. And the growth of it is wild because, again, like you said, when you bring something here that's, especially when you talk some guy into bringing something into new territory, like the spotlight's on you. So like you need to grow this thing because if he wanted to move it here, he would have. Right. You know, so like this is kind of on you. Like you got to perform, or this thing's going to get yanked from under you probably pretty quickly.
100%, man. And there's kind of a funny story attached to that. So like when we flew down to North Carolina, where Movement's based out of, and we had a meeting with like, their exec team, they're kind of feeling us out to see, because at the time, like it was me and 2 of my best friends, and we're probably like 22, 23 years old.
Kids.
Kids, 1 year experience in the business, and they're going to have to invest all this money in us and like opening the office, getting us equipment, licenses, all that kind of thing. And I'll never forget, we're sitting having lunch, and I brought this, folder that had like all of our funded business over the last 12 months. And what I left out from that interview was that business was all given to us in leads that our former boss was buying for us that we wouldn't have anymore if we came over. So, we're closing $2-3 million a month, and we show that to them, and they're like, oh, okay, these guys are doing pretty well. And then once they agreed to hire us, I remember sitting down as Greg McBride and Ryan Carney, who are both employees of the company today. And I said, all right, guys, those leads are gone. We got to figure out how to, we didn't know anyone in Pittsburgh. So we're like, we got to figure out how to make this successful. So, man, we all lived together in the same house on Pius Street.
Oh, I remember. Yeah, I remember the times.
We all lived in that house together.
Because I was doing acquisitions at Urban for them around 16 and 17. So that was when you guys kind of started really getting boots on the ground. Everyone was kind of starting to get their feelers out with everybody, and guys were reaching out to us to try and get the, that. You guys were reaching out to agents and doing, the whole thing. We had some agents in the office. We had some acquisitions in the office. So that's when I first started, hearing about you guys. I met Ryan and them guys.
Yeah. It was a wild ride, man. But I remember like we had this second floor living room at the Pius Street house that we were renting, and we just put a desk and a computer screen in each corner. We're like, all right, send 80 Facebook messages a day, 100 LinkedIn messages. We're going to 20 open houses this weekend, and just all the work that people don't want to do.
Yeah, 100%.
We were just like, we literally have to, otherwise we're not going to have enough money to pay rent.
Yeah.
So it was wild.
Yeah. So, for me, it's, I think when people think a lot about lending, I think it's super boring. Yeah. It's just something that happens behind the scenes. That's, just a fundamental part of buying a car or buying this or buying that. But the mortgage side is extremely different. It is still boring probably to most people, and also they think of you guys as a pain in the ass because you ask for the same thing 700 times. Yep. So like if you talk to people like, hey, you just bought a house, like, oh God, the fucking title, I had to give these people my life story 17 times, blah, 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 blah. But you made a comment before we started that your process is now dialed in.
Yep.
So what are a lot of the improvements and things in the lending world that you need to secure up that people really don't see behind the scenes?
You don't know what you don't know, man. And I think, after being in the business for 10 years now, and we've closed almost 2,800 mortgages, like I've seen so much. So like each day you're tweaking, just in any business.
Yeah, and that's what people don't get is like when you're first starting out and you want to create a process and a system, you can't create anything until something's broken.
Right.
So like that's how this happened.
Yep, 100%. And we've had the delayed closings, we've had, this self-employed borrowers, like you obviously learn from experience, but, some of the things that just everyday consumers don't realize when, they're looking at mortgages and who to work with and stuff is they just think of mortgages and mortgages and mortgage, and they're just looking at one thing being the rate, and they don't realize all the things that go into it and like how their complex situation, like you might be able to get a rate quote, but will they actually close you on time? If they delay your closing, how much is that going to cost you? So there's obviously way more that goes into it. And one of the benefits of where we're at now in the business is I've been working with the same underwriters for 10 years, same processors for 10 years. So like the stuff that we can get done now, I would have never been able to get done when we first started, because the relationships that you build up, and certain underwriters have appetite for certain things. So if we have a self-employed borrower with a ton of businesses, we take a certain approach to that. And there's a certain underwriter we trust to handle that. So the consumer, once again, a mortgage is a mortgage, a rate is a rate. That's all they look at. But until they're in a tough position, they don't always see the benefit of working with someone that's seasoned and like takes a lot of pride in their process. So I think that's what separates us. A lot of times customers can't, sometimes they're too deep in before they can change and appreciate, what we bring to the table. But it's everyday improvements, man. We're still learning today, 10 years in. So.
100%. And I mean, I would have to say that it's gotten, I don't want to say more complex, but I mean, you have national stuff now. You have Rocket Mortgage. You have all these. Everybody's gotten into the financial sector in the last, it seems, 5 years. Has become the hot commodity of, they always say like millionaires are created in real estate, but billionaires are created in lending. Yeah. And that thing is that I've seen that uptick a ton over the last year. So how do you guys contend with a lot of it's a competitive business. Yeah. I mean, I would assume, right? I mean, it's got to be just like construction. I mean, there's remodeling's got 10,000 competitors,
right? I think the hardest thing is just as technology has advanced, consumers can in 30 seconds get 10 rate quotes with a Google search, so in the Rocket Mortgages of the world, everything is digital. Yeah. So there's no like going into the bank, sitting down with your banker, and you just go with them because that's who your mom used. Like it's all techie now. Yep. And the millennial generation, like they're super techie. They don't want to talk to anyone on the phone. Yeah. So a lot of times it truly just comes down to price. I've had customers where I've worked with them for a year, self-employed, bent over backwards on the weekends, Sundays, cost sheets, this, that, put a ton of time into it. We only get paid if it closes. Oh, yeah. We don't get paid by the hour, right? So pricing is so ultra competitive. It's the most competitive I've ever seen it. So that's the difficulty that these big companies with a lot of overhead have is like, how do we stay ultra sharp on pricing when you know that you can get shopped within seconds and minutes? So it's definitely a give and a take. And I will say some consumers, there's a lot of good humans out there and there's also bad humans, right? So like, if you're dealing with a good human, they recognize you've put in a lot of work for them and say your rate comes in 0.1% higher than some competitor, but you've done all the work. Most people will be like, all right, man, like 0.1% isn't large enough. I appreciate what you did. I'm cool with your rate. Or they'll say, hey man, like, can you match that? I really want to work with you and give you the business. So we see a lot of that, but also like, we do a ton of volume. We know where our competitors are at, so we know where we need to price from the beginning to get the business. So a lot of it's just knowing what your competitors are doing, and also we do so much volume that like if we have to cut here and there on a deal, we do what we got to do to get the business. And everyone always asks me, hey Kev, are your rates competitive? And it's like, we're the number one lender in Allegheny County. We would never be that if our rates weren't competitive. But everyone has a different scenario. If your FICO's off by a point, you get an adjuster. So there's a lot that goes into it, man. Sure. But the digital age of technology has definitely made it better for the consumer and worse for all lenders, just because you can't hold that extra margin that you used to. And I think that's in all businesses right now.
I was going to say that. I mean, the issue when big business gets involved with, let's say, medium to small business is they run on paper thin margins and they run fuck you amounts of volume, amounts of volume. And not everybody wants to do that. They used to be a give and take of like, hey, I'd rather charge a higher service and do less volume, but I deliver a better product, let's per se. Now in financing, that's got to be hard for you guys because at the end of the day, you deliver the same thing.
Yeah.
Even though they might not see the additional attachments and things you do on the backside or the back end, and that's got to be a challenging thing to do when you're working with businesses that are probably working on a 2% profit margin, or some shit like that. They want to do $2 billion in loans a year.
The hardest thing on our side is like, I feel like just comparing it to like building a home, like you can tell, when you're getting a higher quality builder, right? You can tell by the finished product. They're going to ask for references. They're going to go look at, other homes that you've done. Yeah. With mortgage, there is no finished product because the consumer just thinks a mortgage is a mortgage is a mortgage. It doesn't matter where it comes from.
I agree with you.
And they don't, like, once they face a problem, and I can't just sit there with the customer and say, oh, well, they're going to mess up your loan. That's why you should use me. Like, so it's tough. Like, a lot of times I have to have the same price as some low discount person that's been in the business for 3 months who I know is going to mess up their loan.
Or probably not even deliver on what they say they're going to.
Correct. Yeah, and I still have to match that price, and they still get our service. And that's, part
even
of the
Even though that
issue.
person can't deliver.
Right.
Yeah.
So that's definitely the struggle that the digital age brings. But the digital age also allows me to do way more business than a loan officer that was doing business 20, 30 years ago. So like 20, 30 years ago, that loan officer did only in-person appointments.
I was going to say it was either walk into a brokerage or walk into, like you said, open houses or it's door knocking or all the old school techniques.
But in those times and days, like those brokerages, and before like TRID came in 2008 and changed the regulation in our industry, these mortgage guys were holding 2 points on the front, 2 points on the back. It was the Wild West, and they were making way more money.
Crazy.
They only had to close 10 loans. I'm easily closing 30 to 50 loans a month now, not making anywhere near that, but I can still make a good living because I can do more volume because of the technology. So it's definitely helped us. But
it's wild to think that you're doing 3 times more of the production, or if not 5 times more of the production, not making the same amount of money.
Right.
As in 2009.
Right. I think
that's wild.
Our entire industry in the mortgage world has been under severe margin compression, and it's
5x.
Yes.
That's fucking crazy.
Yes.
That's wild.
There's been a lot of lenders going out of business. If you're not just above mid-size or large, like you're being wiped away.
100%.
Like every day, like our CEO, is getting calls every day to buy companies.
Sure.
There's been a lot of mergers and acquisitions just because people can't run the profit margins. And then the big guys like Quicken, UWM, they're just trying to, it's like who can put up the biggest numbers and be the number one lender in the country. So they're literally just trying to buy people out. They're running literally multiple quarters with multiple like 300-400 million
loss
to the negative each quarter. And it's like, how long, who's going to bleed out longer, and survive? It's a sick, sick thing.
It's changed. It's happening in the building industry too. I mean, with DR Horton here, they are going after Ryan for market share, and what I've heard, because some of my family works for NVR, and what we've heard through the grapevine is they're willing to run it a loss here in Pittsburgh for 3 years for market share, and they're willing to buy up every fucking lot in cash, no deposits, no nothing. You're competing with $65 billion businesses.
Right.
These are billion-dollar businesses, multi-billion-dollar businesses. So now you have the number 1 builder in the country, size-wise, battling the number 4 builder in the country that is predominantly here, and now you have this struggle over land position and this and that, and now it affects every builder.
Well, what's crazy with that too is that with them buying out DRB locally, like DRB didn't even sell off their other branches across the country. They just sold Pittsburgh and West Virginia, all because DR Horton wants to infiltrate this market.
That's something we just heard. I didn't even know about that.
DR bought all their land, bought all their homes, took all their employees, and DRB is just gone in Pittsburgh and West Virginia.
They didn't do very well, here, to be honest. Even my building that I took over from K. Hovanian, they're predominantly Ohio-based. They just didn't do well here. Pittsburgh's a really tough market for construction, especially new construction.
Right.
We got wild ass weather, we got bad dirt, we got land issues, we got all sorts of, shit like that. And I don't know. I mean, if it's me, I mean, I look at process and systems. Ryan has it dialed the fuck in. I think they're the best builder as a production builder. But when you're building 34,000 homes a year, you're going to have some turds. That's just how it's going to go. I mean, when you have that much volume, and you're running serious volume, but it also made us as a builder look at our business model and say, whoa. We wanted to do communities. No, fuck no.
Yeah.
No. Not right now. Not right now we're doing communities. We need to let the dust settle and let these heavyweights kind of battle it out because I don't have nowhere near the capital to compete with that. I'll get smushed. I'll be one of the, like you said, I'll be one of the smaller companies that goes up for liquidation because I can't contend with the bigger guys.
Right.
And they're going to buy me for 4 cents on a dollar.
Yeah. It's crazy. And I feel like a lot of businesses can relate to that. It's like these companies go public and just get unlimited dollars to invest if someone believes in your product. But where it can go sideways is we've had some competitors in the lending space that are backed by like hedge funds. And when you're working with a hedge fund or you have private money backing you, as soon as you run a couple quarters and they don't see the returns that you initially agreed to, they're pulling the funding. So like we've had some competitors that have lost their funding. So that's one thing that I love about our company is we're 100% private with no intention to go public and we have zero debt. So like that's one thing that really makes, even though we're a top 5 mortgage company in the entire country, we can still make decisions at a, you don't have to go through 20 managers and talk to your, investors. Like it's pretty easy to move quickly, which you have to in this kind of economy.
It's a unique thing, and it's something that we share in common because there's, we've built our company from 0 to, 11 million in 5-6 years and no funding. Like zero company, like all built upon our money. No one's invested in this. No one's given us any startup costs. I had Chris on here, Masuka, who gave us some private funding in the very beginning to build specs. But other than that, I mean, we've never put any money into the company. And I tell people that because the same thing like you said, I want to be able to make decisions like this. I move like a sports car, even though the business moves like a barge. Where like I want to get things done and I want to get them done. And I also don't want the corporate structure. I'm not a corporate guy. Like I don't come from that world. I have zero desire to go public. I have zero desire to leave Pittsburgh and to go to other markets. I have no desire. For us, we need 25 good clients a year and that's all I need. And we're going to, we maintain and we're good with that. And that's just the desires that we kind of have. I mean, I tell people all the time, I could have definitely gotten 10 million from somebody and blew it into the business and scaled way faster and probably be out of business because I would have made the wrong decisions.
Well, and then when you get that money, those investors want the X return. So that means you got to sell X amount of houses and then slowly but surely the quality comes down.
Well, you're now forced to make deals that you normally wouldn't do. That's what I tell people. Like, the reason why I don't do flipping and shit anymore because I don't like the interest payments. Like I just don't like it. It makes me think emotionally when I don't want to think emotionally. I react in business with no emotion. Zero. Like I might, I'll get pissed about some stuff, but like I don't make decisions for our company based upon like, oh my God, like, I hate doing that. When we were early on and we started doing them specs and stuff, and I'm like, I owe 18 grand a month in interest. I'm like, okay, this fucking sucks. All right. Like this is awful. Now I'm like, all right, sell. I don't care what it goes. Like price cut. I don't want to make another payment. So, that's why we just slow and steadied and build it the way it needs to be built. So you can fundamentally see, and also too, I think people, when they think that when you get that 10 million inside your company, that's your money. That's your money now. Like you need to look at it like that, but when you start building a business from like brick to brick to brick to brick to brick, and it's your money you're losing, it's really your money, you're going to think about this totally different. You're going to fix some shit. Because you don't want to do it again, I mean, I've made some $50,000, $60,000 mistakes early on where I've had to go to my partners and be like, hey guys, I fucked up. Pretty good too. So like, and as you grow in the business sector of things, like problems become expensive, and that's, the issue of, I'm sure you guys have had, things come up, you've had to give things over, concede things don't always go as properly as well,
I always tell everyone, mo money, mo problems, as Biggie would say, but it's so true. Like people think you can just grow and not face any challenge. And as soon as, someone feels a little bit of a challenge or discomfort, they're running the other way. And it sucks to make mistakes, but you got to own it. And as cliche as it is, like learn from it and move forward and make sure it doesn't happen again.
Yeah.
Especially if it's an expensive one. But I think a lot of people think that it's always just going to be easy and a walk in the park. It's like you got to embrace the challenge. But that's what separates people, man, because a lot of people can't take the heat. The more that you can take on your shoulders and the more stress that you can handle, the more money you can make and the larger you can grow. And I think that separates everyone.
100%. I mean, you got to be willing to endure some real bullshit to get to the other side of it. And
wake up the next day. And
do it again.
And the next
do it
day,
again.
and smile in the face of that.
And do it again, and do it again, and do it again. And what's weird is I listen to a lot of Patrick Bet-David, and he always says, he made the most money from position 3 to 6.
Yep.
When you're number 1, all the pain comes your way. And that's the reality of it. I tell people, you better love what you do, because if you're just chasing this dough, like that's gonna burn out when you make some. It's not all just about money. It's about building a legacy, and it's about building something that changes Pittsburgh, and it's about building something that's going to change the dynamics to everybody that's inside your company. It's going to change the dynamics of your clients. I tell my company all the time, I'm like, guys, there's only good or bad to this. There's no middle ground in building a house. No one's like, it was like, all right, it's either you have a good experience or you're not, and you're changing that person's life. Somebody might close on a loan December 23rd and need to get in there before Christmas. I had to change that year's Christmas.
Yeah, we have a lot of those.
That's what I mean. A lot of deadlines you guys got to hit and all the same stuff that you kind of contend with. And, it's interesting, the more I've talked to a lot of business people over the years, is all businesses are pretty much the same. Yeah. You deal with the same kind of problems, deal with the same kind of issues. I get people all the time, they'll come to me like, oh, but you can't relate to us. You're so much bigger than us. I'm like, whoa. My problems are the same as your problems. You have communication problems. Right. You have organizational problems. You have underwriter problems. It's the same as field problems. Right. They're all problems. It's just, what does my problem cost me is more than what the problem costs you. Right. It's the same problem. Right. It's just as you grow your business bigger, the problem gets more expensive.
Right. I think the most common thing is you either need more leads or you need to figure out how to convert your current leads at a higher rate. Lead conversion, more leads, they're the biggest things in sales. And how well do you guys track your KPIs on leads? Because leads for you have to be a massive play. Yeah. I don't need as many as you guys need. No. You guys probably need, you got to know. How many leads do you average a month? If it's too many, let's just go by week. Yeah, no, so we track it super close.
You have to.
So we typically average somewhere around 100 what I would call credit pulls per month. So there's some people that don't ever make it to credit pull.
I was going to say, there's levels to that.
So there's probably maybe 130, because most people that call us and inquire, they're going to apply. Yeah. So probably about 130 at-bats, but really 100 people that actually pull the trigger to do an application. And
so then you're closing 30 to 50.
Yeah, so I'm doing a coaching course right now that I'm leading for our company, and I was just looking at this morning. In 2023, my conversion rate was 28%, and year to date, it's 33%. So that's from credit pull to funded. Yep. But in our business, some people, we pull their credit and they buy a home next week. Some it's 3 months, some it's 3 years.
Yeah, 100%.
So it's not
your averages get fucked up.
Yeah,
that's the same thing. We're getting ready to go down to we're doing coaching with Mike Claudio, and I'm down at Win Rate, and they're in South Carolina. It's construction only coaching. Okay. So I've done the broader business coaching before, but now I'm kind of excited just to get into somewhere where it's only construction oriented. Right. Same thing. He sent us a list of things to send over, and it's leads today, conversion rates. I'm like, yeah, I got it, but dude, the same thing. We might have somebody that reaches out, but might not build for 3 years. Right. So it's a lead, but the conversion fuck.
Conversion is tough. Like you obviously, depending on your business, like it's good to look back over 1 year, 2 years, 3 years to really you want to kind of get a range. So like when I was really looking at, I think our lowest year ever over the last 10 years was 25%. I think our highest was 35%. But really what I focus on is like, man, how can we convert that 100 a month at 50% instead of 30? Because we don't technically need more business.
No,
if I can close 50 loans a month for the next 10 years, man, I don't want any more than that.
Yeah.
I'm happy. I'm good.
Yeah.
You kind of find where you want to be. And so it's just like conversion is all in the little metrics. So like one thing we did recently to try to make the process more personal, because it does become like so impersonal with what's your rate, and it's like, hold on, like let's get to know this person as a human and make it more than rate. So it's like after I get off the phone with a new customer, I hang up and I send them a video that I recorded that says, hey, I'm a real person, great chatting with you today. If you ever have any questions, you can text me here. Little like checkpoints and follow-up metrics is some stuff we try to focus on, like to make it more personal and in turn, have a better conversion
Do
rate.
you guys have that all set up automatically now? I'm assuming it's all automated. Do you have a custom built out CRM for all your stuff? And
Some of it is.
the only reason I'm asking is because I built a fully custom CRM through Go High Level, and I paid probably $20,000 for it, and it's fucking hard to like get the bugs out of the automation.
Yeah,
the automation's a motherfucker.
Yeah, so some of it's manual, some of it's custom. We use Salesforce as our CRM, and there was a dude that used to work at our company that built a custom Salesforce for like a movement loan officer. He since left the company, still has his CRM system, and I have a super customized version of his CRM. So it's been working out great, and it really helps. Like, one tip I always give to business people and people that do coaching with me is think of all the repeated conversations you have in a day. Like a real estate agent explaining a sales contract. For me, we have certain disclosures that have to go out. And there's always the same questions every single time with every single customer. So it's like, okay, we click a button now as soon as we send the disclosure out, and it sends them a video of what to expect on that form. And guess what? We give them the service, answer the questions before they have the question, and it saves me X amount of minutes per day so I can focus on, higher income producing activities. So we're huge on the CRM and are constantly improving that to how do we still give a great experience and have a personal touch, but like don't call me unexpectedly and take an hour of my time. Like how do we balance that, Because you don't want it completely automated to where you never talk to them.
Oh, 100%.
But you still want to, most people don't want to call if you can give them the answers ahead of time. So we're always trying to balance and figure that out.
Yeah, it's got to be the leads for you guys has got to be just so key, So how do you what sources of marketing? I know you guys did cool, Facebook stuff. You guys did a bunch of cool shit for a long time. Got a lot of people's attention that way. Marketing shifted a ton over the years. Yeah. So 10 years ago, you weren't marketing the same way you are now. No. So how are you guys getting ahead? How are you making marketing for you again be cool and because again it's looked at as a very mundane industry because I would assume a lot of people even older people, and I might just be assuming they're like, well, I bank with First National, I'll just talk with them. What motivates somebody to call you over their said PNC?
So when we first got into the market, I feel like Pittsburgh, now that I've been here about 10 years, Pittsburgh's always a little bit behind.
Fuck yeah, we are. We're 10 years behind.
So when I first came here, no one had ever heard of a closing in under 30 days on a mortgage. No one had ever heard of what's called upfront underwriting, where we actually verify the person's qualified before we release the pre-approval, like shattering
it's groundbreaking things here.
Yeah. So we kind of initially marketed that, and then eventually all the competitors figure out what you're doing, and then they copy it. So the way I think of my marketing is how are we bringing something unique every single month that's different and staying ahead. And then it's just, you got to love it when you just see your competitors try to offer the same thing in a different spin. It's like you clearly just copied all of our stuff, but I'm 4 steps ahead, so it's all good. So we initially started with a lot of Facebook videos, a lot of posting about quick closings. That kind of got like a wow out in the marketplace. Now it's completely shifted, man.
I was gonna say I haven't seen any.
We haven't done quite as much social media stuff, and luckily now, like 10 years in, we have almost 3,000 closed clients. So we do a ton
Referral.
of mail,
ton
of mail,
nice.
ton of mail every quarter. If you've ever taken a mortgage from me, you're getting some sort of quarterly mailer from us. We do past client events now. We're doing one at Simmons Farm in October, family event for our past clients, and a couple hundred will come out. Yep. And we're at the point now where our relationships are so deep with our past clients, and our business comes from two places for the most part: past clients and real estate agents, and some builders as well. Sure. We work with a couple builders, so our relationships are so long standing now that we're more in a, like, those first 5 years, you're fighting to stay alive. You're fighting to keep your head above water. You're scratching for every deal. And now we're so ultra focused on just servicing the heck out of the referrals, because the referral stream is built. It's coming in. But if we drop the ball once, those customers won't call back. Those real estate agents won't call back. So we're constantly focused more so, not necessarily on lead acquisition and like doing a ton of marketing stuff, but like, how can we convert what's already coming in at a higher level and make our customers happier versus if they go anywhere else. We still do some social marketing, but just not as much as what we used to, just because our business has matured, So.
Yeah, that's the best way to put it, is business maturing.
Yeah.
And that's been same thing for us. I mean, it's all, remodeling first few years is all referral based. Yep. You go back to the people that like, and trust. And same thing about us. Hey, man, we'll give you this discounted bathroom. Let me just get my work out there, yada, yada, yada. And you do that for a long time. And that kind of starts spinning. And, yeah, I mean, marketing is an interesting thing is, for a long time, up until probably this year, I didn't do any marketing.
Yeah.
Like, I mean, we grew to 8 million with $2,000 a year in marketing,
right?
But it was all just past experience people, or, it's weird things. We get weird stuff now. Like, my CPA is, he's located in Moon Township. I think he was in Peters for something they had going on, and they just randomly got on a conversation, and he was like, yeah, man, Hemlock's the best builder in the area, not knowing that that's my CPA,
right.
And he dude works for Columbia Gas, and he's like, yeah, I deal with all the sites, all the builders, they're all fucking, yada, yada, yada. He's like, man, I got to give it. It's just weird stuff now, right. And it's weird stuff that we get credit for, like just job, like maintaining a site. Like right. People are like, your sites are so much cleaner. You keep the roads cleaner. Yep. You keep the sites cleaner. You keep nothing blows in our yard. Like, it's just weird stuff that matters that you wouldn't think really matters.
You actually care.
Yeah.
Wow.
Yeah. You know what I mean? It's just an amazing thing. Like, and construction's one of them weird things where, like, again, it's, that's another reason why we decided not to go into the production world is, you get a certain level of builder, and then especially when you go north, all these builders have 5 communities, so you're cutting your other community off at the knees to sell at this community because you got to meet a quota. That quota comes back to me as like paying interest.
Right. Like,
I feel pressured.
Yep.
I don't like it. Yep. Like, I don't like doing business. Like, stress, I'm cool with. Pressure to make a move, I don't like that. And that's the thing that when I kind of start playing around with the developers a little bit and seeing, what are they into, what are they not. They're like, well, you got to meet this quota. You got to take this takedown. We got to do this. You got to put 10% deposit down. And I'm like, oh my God, I don't like any of this. Yeah. I'm like, I don't know we're not ready for this yet. And again, it was more about like, let's just get internally really good with our systems and processes. And then if we want to go out into that world one day, we're ready. Right. I still like building more custom. I like, a lot of people come from, like you did, take designs off the internet and want to flip flop, move them around. And I like doing that. It's, we're not building, we build similar style houses. We don't build the same house,
right?
And that's what keeps it cool with us. And, just like you said, I mean, there's a lot of options. And now we just had a meeting the other day about, the lending. And we talked a little bit about, construction loan lending, and you guys kind of got into that a little bit. And every bank is so different.
Yeah.
I've dealt with every bank under the sun now, and we like a few. Yep. And that's just kind of, but we're going to make it really a thing now coming up. But like, you almost have to use these lenders, right. Or I can't, Like, were you like Premier Bank? They're the fucking worst. The fucking worst. We're dealing with them again right now. It's our third time, and I didn't know. But this is what brought this meeting up, because like they'll give you draw allocations based upon whatever they feel like. I'm like, I didn't request any of this.
Right.
Like, I don't want this. Why are you giving me this money? What am I gonna do with this money? Now I got to put it somewhere, and I got to hold this. Or you didn't give me enough money.
Yep.
And they're, third-party inspectors, there's this, there's that. There's all these things where you're like, all right, this is not working for my business model.
Right.
And there's a few that do, and that just changes the game for you as a builder.
I think it's very similar to what I deal with, like real estate agents. So, real estate agents, seasoned ones that do a good bit of business, they've worked with every bank.
Yeah.
So they, real estate agents, builders, and flippers that do a lot of business, they've seen it all. So they get to a point where it's like, okay, Kevin hasn't screwed me over in 7 years and always closes on time. Like,
count on him.
We don't care if PNC is $1 cheaper, which most of the time they're not. But if it was the case, like it's literally the same thing, because the consumers don't know the headaches that you've seen over the last 10 years with certain lenders. And that's kind of the hard part of where going into it, the consumer doesn't always know. And sometimes, like on our side, if we're trying to say, hey, like, this is why you shouldn't use them, it really depends on how much they trust you, if they're going to take that guidance or stray. Yep. And it's like, hey, I told you so when you ran into that issue, run into the issue, but it's always a challenge.
When you bring up the client doesn't know, what the client doesn't know is that NVR is a financing company. Yeah. They are not a home building company. Yep. NVR is a financing company. That's how they make their money. Yep. Newsflash to everybody. Yep. This is how they make their money. It's mortgage, title, and insurance. Yep. That's how they make their money. They have to build a house so they can get so they can make money off you 4 times.
Their capture rate is like 98% or something. Yeah. It's crazy, because this incentive they give is so large that you literally would be crazy to not use their in-house services.
$15,000, which but here's the thing though, they dictate how you use it. Mm-hmm. And they dictate that you're going to buy down points. Yep. Then they're going to dictate
3, 2, 1 buy down.
That's it.
We're going to charge you a 0.5 point over market, but you're still going to take it.
That's it. Because this $15,000 is off. You know what I mean? Then we might throw in a little half a finished basement here.
I deal with a lot of the sales people at Ryan and Heartland, and most of them don't even enjoy working with MVR, but they know they have to, and there's no choice. But I've been called in to rescue the deals they can't put together on occasion, because it's like even the loan officers that are working at NVR, they're not as talented because they're working for half the comp of what a normal loan officer would work, but they're getting fed business. So that's why
shit tons.
NVR is for the house only.
Yeah. Yeah. It's, that's what people don't understand is like that part of their business, like in their balance sheet on that, small. Like the profits they make per build, small compared to what I would make, small. But they make money off you 4 times every step of the way.
I always tell people too, like, I get the lending thing. It's like insurance. I don't know. I don't think their capture is too high on insurance, but the title thing, like, that's where I get nervous, because most home buyers have no clue what title is, obviously. Sure. But I tell the home buyer, I'm like, hey, you realize all the subs that are used to build this home. If one sub doesn't get paid and that sub puts a mechanic's lien on your title, like, do you really think MVR's title company is going to have your back or the builder's back? Most consumers, they just don't know until you're in that situation. Like, if you're a consumer that works, somebody's a teacher, say wife's a teacher, husband's a firefighter, like your good old American like couple, like, you think they're spending their extra time Googling what title insurance is? No, they just go with the flow and they get sold, and it is what it is.
Yeah, actually, it's wild that you brought that up. So I have them 2 lots in Peters that we're building on Bebout and that I'm on. So we bought that, or my clients bought that, and mom bought it. She's on the left, son's on the right. He's a school teacher at Peters. They're moving down from the mountains. So you remember that old dilapidated shitty house that was there? Yeah. Oh my God. So this dude forged documents of a death certificate from his wife. They were divorced. He put on there they weren't. So the marital split, some of that money he got like $165,000. Some of that money should have went to the kids, her kids. Right. It did not. So we get this letter of like, whoa, you guys aren't doing nothing here. Nothing, because these kids are demanding $85,000. So title insurance gets involved. They're doing fucking nothing. Zero. They're like, oh, we're sending it. We're gonna deal with him. He's gonna pay. We're waiting on him to call us back. I'm like, this fucking dude could call you back?
Oh,
this dude used to throw dead dogs out his door, like, and they would just die there. Like, this dude's not calling you back. This dude committed a crime. He's like, well, this will play out. I'm like, what are you talking about here? This dude committed fraud. Like, what are we talking about?
Right.
They don't want to help with the situation, period. So we can't build there. Couldn't do anything. So I'm driving home one day. I call, the title company who we dealt with, the closing company. I'm like, listen, man, we need to come some sort of settlement here. Like, this is crazy. Like, whether I got to jump in and do whatever and whatever, because they were going to do nothing. So this was going to hold up over $1 million in revenue, like $1.5 million in revenue for me.
Right.
So I'm like, all right. So we get the kids down to like 45 grand. I'm like, all right, what are we going to do here? Right. So I finally talked to the title company, would only take $10,000 of responsibility for it. The other closing company who didn't have to threw in $10,000, and I covered the last $25,000.
Wow. Isn't title insurance sole purpose like to protect when there's fraud and
100%.
stuff? Because I can understand
100%.
the title insurance company, if they did the proper searches.
What they were going to do is, they did, and what they were going to do was they were going to tie it up in court for the next 3 years until they figured out, because they didn't want to pay.
Right.
Did not want to pay.
Right.
And I was like, I don't have the time for this. First off, I'm going to lose both these builds.
Right.
So I'm like, all right, $25,000 divided by 2. I got 12 here. I got 12 here. Is it still worth it? Sure.
Yeah.
Plus the marketing that I'm going to get from them lots, based upon brand recognition.
That's a busy road.
100%.
I see it. Yeah.
I've already gotten 20 leads because of it.
That's awesome.
So like I had to take all that into consideration, but like if it was up to title insurance, we would never be building them houses.
Yeah.
Period.
That's crazy.
So I ponied up 25 grand. Yeah, I got them to cover 10. The other cover 10. And like he's like, dude, I made $1,200 on this. You know what I mean?
That title insurance is literally there for that specific situation.
They did not want to do fucking nothing.
Insurance companies, they want to take the money. They never want to pay out the claims. It's
100%.
just, oh man.
And that was like the first time I've ever dealt with something like that. Of like, I was like, what is going on here?
Yeah.
Why do we have nothing going on? So then our client, called and she's like, can I just ask you why you paid this? I'm like, do you want like the real spiel here? That's what I told her. I was like, if it was up to them, you would have been tied up in court forever. And then the $185,000 you paid for this, tied up forever.
Yeah.
And you wouldn't be able to do nothing.
Right. That's crazy, man. Well, hopefully that customer refers you future customers.
Yeah, for sure. For sure. So, I mean, obviously you've seen the ebb and flow of business in 16, 17, I would call normal market.
Yeah.
And then we went into absolute pandemonium.
Yep.
So, and now we're seeing the repercussions of that.
Yep.
What are your thoughts whenever they lower the interest rates to 3 and below?
Man, so in 2020, 2021, those were the craziest rates I've ever seen. I started in the business in 2015, so coming up on about 10 years. And I mean, we did 100 plus refis in each of those years. It obviously ignited the purchase market. I personally, don't think we'll ever see that again because now.
But do you think we should?
I don't think so.
Yeah.
I don't think we should ever be that low.
Yeah.
I think if you look at mortgage rates over the last 10 years and like exclude the COVID dip, I mean, it pretty much hovered from like 4 to 5.5.
For sure.
As like.
I always say to everyone, this is just me. If you're below 5, we're robbing from each other.
Yeah.
And we're going to see something very bad come at some point.
Yeah. 100%. So obviously, we want rates to come down because that ignites our business and we make more money, for that. But for the greater economic world, like I don't think they should ever go below 4% as like as a bottom and a ceiling. Like, October of last year, we're locking customers at 7.99%, and today's average rate is around 6.5. So we've already seen about a 1.5 improvement, which is fantastic. But I think the other, thing that a lot of people are confused about in today's market is the Fed is supposed to do a rate cut at the end of September. I think the 17th and the 18th is when they meet, and we have a lot of customers, that are like, "Hey, we're gonna hold off on doing the refi or locking in our rate."
Build.
Yeah.
Oh yeah. I have a guy that thinks Donald Trump's going to save the world day one.
Yeah. Yeah.
I'm like, oh, buddy. regardless of how you feel about politics, it's not happening.
The knowledge and education around rates is fairly limited, and there's limited information out there on it. So people just kind of like come up with their own, analysis. But when the Fed cuts rates, that's the federal funds rate that they're cutting. That is not always going to trickle down into lower mortgage rates. So
it just so happened that when they went up, it did.
Yes.
Yeah.
And I believe that, so mortgage rates follow most closely with the bond market.
Correct.
And I believe that the bond market has already priced in the September cut. So like all these people, I think, are going to be a little surprised when
you
September,
get a quarter cut and it doesn't do shit.
Nothing's going to happen.
Yeah.
So
because like you said, we've already gone down 1.5 points.
We've already been down 1.5 points. I think there's going to be lower interest rates post-election. I think regardless of which party is elected, I think post-election we're going to see lower rates. But I have a lot of people that are under contract closing in October or late September. I'm like, hey, we can lock you about 6.5 today or 6.3 today. And they're like, no, we want to float. We're waiting for that September cut. I'm like, you might be waiting a while. So, yeah, man. I mean, it'll be interesting to see kind of, what happens with the election and where rates go to.
Yeah. Yeah, because it's, everybody, oh, my God. It's the same as when you ask your parents, what'd you buy your first house at? My dad was like 12 and a half.
Yep.
You know what I mean? Like, for me, what it's done for our business is it's actually helped us.
Right.
Because as a custom builder, when you had limited inventory on the market, and now you're going to have this ripple effect of limited inventory on the market for a while now. Because what a lot of the older demographic did do was refinance their house, and now they're not going to downsize because they realize, why would I pay double for a smaller house that I don't own as opposed to this one that may be bigger, but I don't know shit.
Yep.
Or I'm locked in at 2%.
Yep.
And I can leverage my refi money, which I got back at tax-free, to live out my rest of my life. So, that's because Pittsburgh, we're an older demographic. We're an older demographic market. Right. So they put the houses on the market for the younger buyers to buy. That's where the grandma special came from. Yep. We don't have that. That market was basically wiped out because of, those people were like, we're going to hedge our bets and not pay for something that's way more expensive.
Yep. No, I think, builders are the only thing that's going to get us out of this limited inventory market. So that's going to be a huge opportunity for you. But it's all the people that, are listening to this. I would say, like, these rates, don't wait for rates to continue to drop to make the decision to build or to buy, because focus on the payment, not rate timing. No one can predict what's going to happen with rates. If you're comfortable with your payment, make your decision to build or make your decision to purchase. And if rates ever come down far enough, then you can always refinance and get out of it. Too many people are wrapped up in the rate, but I think there's going to be a limited inventory market for the foreseeable future, just because, like you said, there's so many people out there that are at 2%, 3%, 4%. They're just not going to move.
Shit tons.
They're just not going to move.
Because no matter what, when you're at a 2, even if it settles at 5, 3% is a massive deal.
Yeah.
That's a huge deal.
Yeah. When you think, like, a lot of these buyers out there think 3% is going to come again. They're like, oh, I'm going to wait to buy or build until 3 comes again.
I tell people this all the time. I'm like, listen, you ever see that again? We're done.
Yeah.
We're cooked.
Yeah.
We're cooked. We do this again. Like, we can't do it. For one, we have a very unstable banking market now because of the commercial real estate that they did during that time, because everybody over leveraged. They over leveraged. They took too much money out. Now they can't repay it back because the commercial sector is not doing so hot. And there's a lot of consequences when you give out free money. And there was a lot of consequences when the availability for capital was there for business owners. Everyone was jumping on it. I'm gonna get this, angel money or da-da-da-da-da. Like, bro, if you're not a real operator, like, you're going down. I tell people that all the time. They'll be like, oh, this dude, he had help. He had $5 million behind him. I'm like, yeah, but dude, that might keep you afloat for 5 years until the books are not cooked anymore. Then when the game gets real, you need to be an operator. Or you're in deep shit. Because business, you can't just keep throwing money at problems. The thing about construction and all the other stuff, that the game that I'm in is, you can throw money at it, but construction's like Miss Pac-Man. She just keeps eating, buddy. Doom, doom, doom. Whatever you give her, she's knocking it down, dude. And that's the way it has to be. I mean, you're going to have to make tough decisions. You're going to have to make tough calls. You're going to have to make, a lot of tough decisions on the spot based upon where you're at currently. So what do you think is the biggest misconception about mortgage rates right now? Other than they're going to go down.
Yeah. I think.
Do you get a lot of talk of the political stuff right now?
Oh yeah, man, a ton.
Because it's like it's either you're an extreme left or extreme right.
Yeah, there's
there's no in between anymore. Yeah.
There's definitely a lot of politics involved and stuff, but I think the biggest misconception is people are so focused in on the rate and they're not looking at the monthly payment. So to give you an example, today I had a customer that, we're quoting out. They just had an accepted offer, and the interest rate range was from 6.5 all the way down to like 5.75%. And if you just ask a customer, hey, what would you prefer, a 6.5 or a 5.75? Everyone's going to say a 5.75. And what a lot of lenders do is they hide points and fees, to buy it down. And I said, you can get the 5.75, but it's going to cost you a point or two. And we compared the.
I didn't ask for that.
Right.
So they see it on their closing statement. They're like, what's this $8,000 here?
Yeah. And, I took the customer through comparing the payment between a 6.5 and a 5.9, and it was a $77 a month difference in payment. So
I completely think, and this is just me, I think buying down points is the dumbest fucking thing in the world.
It's if we're in a decreasing interest rate market, it could make sense if you're going to be in the home long enough. But generally, it takes 30 to 40 months to break even on your points, and we're in a market.
1 point.
Correct. And we're in a market where rates should come down eventually, so you'll probably never make it to your break-even point. In 2020, 2021, that's a great time to buy down the rate, right? Like, I have a 15-year mortgage at 1.875. I bought it down at that point in time, and I'm like, all right, well, I'm going to hold this for a while. But I think the biggest misconception is certainly they get too wrapped up into the rate. Rate is very important. You want to know you're getting a competitive rate. I get it, but focus on the monthly payment when you're making your decision to purchase. And when you're looking at a rate with points and without points, a lot of times there's not that much difference.
There's zero.
Don't pay the points.
There's fucking zero. There's zero. Like the amount of like hidden fees and bullshit inside these lenders and all this other shit is out of control. And I'm not going to mention any names, but even on the investment world, like I go to Chris and I pay 15 in points, but I know that I know exactly what it is. I know every time my closing costs are going to be around $6,000. It's fine. I know that. Cool. I know that he's going to fund 100% of my deal because I've done business with him 100%. I know that there's no hidden fees. I know exactly what I'm getting. You get some of these national companies, dude, you're coming to the table with like $50,000. You got fees out your ass. You got points out your ass. You're like, what in the fuck happened?
The stuff that Rocket Mortgage is doing is literally criminal. Like, I've seen so many estimates from them. They have some call center person that's been licensed for 6 months. They get the customer to sign this document and they collect an application fee, and then you never hear from that salesperson again.
For sure.
They get paid not when it closes, when they collect that application fee
100%.
on the phone. And then I've seen these estimates where, Rocket said they're going to give me a 5.5 with no points, and then there's 3 points on there. And it's like another thing where a consumer thinks a mortgage is a mortgage is a mortgage. It's like you need to trust the person that's giving you the biggest loan.
Because they don't understand that origination points get paid up front.
Right.
That's not an over the time points thing. That's like 3 points.
Sunk cost.
That's 3 points on $300,000.
Yeah. It's crazy, man. But if you're a consumer out there listening to this or a home buyer, there's more to mortgages than rates. Look at your loan officer's track record, how long they've been in the business. Look at their reviews to know, what kind of business are you dealing with, and can you trust them? I think that's very important when you're doing your due diligence.
Yep. So just from your experience, and like you said, you think no matter what, there's going to be a rate lower. How low do you think it may go, and how long do you think it may take to get there? Again, we know it's speculation, but you've been in the industry almost a decade now, and I get it. Like these kind of times, I don't know if you've been through them. I haven't, so this is, COVID for me was like, I was year 2 in business and ready to fucking drown.
Same. Same. COVID was the best financial year because we wrote the most loans, but it was also like the worst year because we were not ready for that. But, so the tough part about rates is it's not just all based on the Fed, meeting and scheduled rate cuts.
So let's stop that there.
Yeah.
What predominantly goes into an interest rate for mortgage?
So
Because I don't think anybody really knows.
it really, how a rate is determined is obviously based on the customer's application. So
Correct.
credit score, debt to income, loan to value, loan type all play a role in. But
So is that more important than anything?
that's a contributing factor, so like say the average rate's around 6.5, but say you have a bad credit score, you're not going to get to 6.5 because you're not the 780 and above, but you're going to end up at 7.
So when companies put out, let's just say 6.2, that's for like a 700 and above person.
That's normally 780 and above, like super top tier, large down payment.
So anything below that, you're going higher.
Yeah. If you don't fit and all lenders advertise their rates on the perfect attributes, which only 10% of people have.
Just like Ryan Holmes says, starting at 300.
Yeah.
You don't finish in 300.
That bothers me so much. So your attributes as a borrower play a big role, but it's probably going to account for a 0.5 point swing up or down. So if the average rate is 6.5, if you're super duper well qualified doing a huge down payment, maybe you can get all the way down to 6. But if you're bad, maybe it's all the way up to 7. 0.5 point swing. The other big factor is rates are tied into the stock market. So the stock market, the world news. So if all of a sudden a war breaks out overseas, rates can drop in a drop of a hat. And a couple of weeks ago, there was a stock market sell-off that screwed everyone's stocks, 401ks, and everything. But guess what? That was the lowest day for mortgage rates that we've seen in a long time.
That's because them fuckers were shorting everything on the back end. That's why.
Yes. And what's wild is mortgage rates have almost an inverse relationship with the stock market. So as stocks do good, mortgage rates go higher. As stocks do bad, mortgage rates get better. But it's not all just the stock market. It can be anything political.
It's any economical swing worldwide.
Jerome Powell, the chairman of the Federal Reserve, he gets on and says anything. My buddy always jokes with me. He's like, Jerome Powell farted today. Rates went down a quarter. So like anything this guy says, his tone of voice can move rates. So there's so much that goes into it. No one can fully predict it. But I'll tell you right now, the cut that's coming in September, the bond market has already priced that into today's rate. So it's going to be very interesting. Like if that quarter or 0.5 point cut comes on September 17th.
No way.
It will definitely not be 0.5 point, but like what's going to be, because everyone's waiting on that Fed meeting now, what's going to be the next big thing? And I think it's going to be the election is truly going to be, what's going to keep moving these rates down. And I think once we get past the drama, whoever is elected, it's going to settle and then rates will continue to come down. Like rates at 6.5%, 7% is not good for anyone. The housing economy, home builders, mortgages, banks, that is a big portion of our economy.
It's enormous.
And that has to come down because these banks are sick of high rates because they're not writing as many loans. The home builders want lower rates so that they can get more people qualified and sell more homes. So they're going to come down. My prediction, I would probably say if we're at 6.5 today, I think by this time next year, 5.5. I think gradually over the next 12 months, I think 5.5, and then I hope we settle right in that 5 to 5.5 range.
Secondary question for myself is I hold a lot of commercial loans. So the commercial refis are also different than the residential refis.
Way different, yeah.
Way different. Do you see that coming down in the next year? Only because I've bought... what I missed in the other times of life is there wasn't a lot of opportunity. So, this time I was like, all right, regardless of the interest rates, if the house cash flows, I'm buying it.
Yep.
So I'm holding 12 houses at 7 to 7.5.
Yep.
Reached out to my guy the other day. He's like, hey man, unfortunately, we're still writing commercial loans in the 7s. I'm like, fuck.
Yeah.
So because I would love to do a wrapped in 12 property refinance and not even to take equity out, just to get my interest rate to, let's say, 1.5 lower. 1.5 lower on 12 properties makes a difference for me.
Right. Well, I mean, I've always, over the last 10 years, I feel like commercial typically runs a point or 2 points over residential. So, and I feel like they have to stay in that window because eventually, like, there's a lot of just investors that buy a 4-unit and get a commercial loan for LLC reasons and stuff. So, like, if that spread is, say, 4 points or something, like, the commercial lenders would lose so much business.
Because we would all just put in our
personal name. Yeah. So like,
and take the liability of it.
Right. Yeah. All right. So I think they have to keep it within a point or two. So I definitely think that'll correlate and come down as well. But it's not going to be this. I don't think it's going to be this big day where they just drop.
We're not going to have an aha moment.
No, it's going to
be a slowly gradual. I mean, it didn't. I shouldn't say. I mean, at one point, it went way the fuck up pretty quickly.
Yeah, there's definitely some spikes and some drops, but like the biggest movement I've seen was when COVID was just like going crazy. Like the stock market like was having sell-offs. Everyone got nervous, and mortgage rates they just plummeted. Like we were actually on a President's Club vacation trip in Mexico with our company, and we didn't know if we were going to get back into the States, but rates dropped so quickly, so fast. No one was on vacation. Every loan officer is like on their phone working the entire time because it was that sizable of a drop. So there would need to be a huge world event, something insane like COVID to happen again to create that uncertainty in the stock market.
Yeah, because the election's not big enough.
Right.
I mean, it's just United States based.
Right.
You know, it's not a worldwide economical.
If there's like a world war, like that would be the equivalent of like another COVID where rates could drop, which honestly, like in today's world,
happen.
literally could. So who knows, man? But my prediction, I would say 5.5 by this time next year. It's
and again, I mean, I bought a lot of, you know, my last personal residence. I was at 4. I was probably back in 2017.
Yep.
You know, and that's about as good as you're going to get.
Yeah.
You know, you're happy with that.
Yep.
I think, you know, what's crazy is do you had to have getting a lot of people that are, you know, again, wanting to wait for that, thinking that's going to happen because you were spoiled at 2 and 3.
Right.
Like I tell people all the time, like, listen, you don't want to see that again, you know, and there's a lot of people that make decisions based off of that, you know. Unfortunately for us, we only have one guy who's just like, I'm just waiting to watch these rates. And I'm like, okay, whatever.
No one can predict it. You know, if you could predict rates, you'd be making millions on the stock market,
For sure.
you know, betting on the stocks and stuff. But like, you just got to buy based on monthly payment if that fits your budget.
Yeah.
So
awesome, man. Well, what are your social links? How can everybody find you?
Yeah, man. Instagram is probably the best way to get me, and it's _Kevin O_. So _Kevin O_ on Instagram.
Awesome. Well, I appreciate you coming on, man. It's been a great conversation.
Yes, sir.
All right.